Hello, everyone, and welcome to another episode of Genius Wednesdays, brought to you by the geniuses at Team Genius, CoinGenius. Today we have a full house. We're going to be kicking it off with CoinGenius Head of Market Research, Mr. Steve Quan, to discuss the crypto market and the capital markets and commodity behavior. We'll also be talking about the stimulus package and what that means to the global economic engine. And of course, we'll be touching on COVID. So with that, I will turn it over to Mr. Steve Quan.
Thanks, Christina. So it was the not typical, but you had people get forced out on Friday, as you can see right here, and the drift lower into the Sunday night weekend warrior ending, and you set lows, and you then had the root move back to unchanged or virtually unchanged by the equity open. So guys, for margin purposes, had to probably get out here, and the weekend warrior got kind of paper cut to death. Fairly uneventful. I guess it's just a slight drift lower. Now, here is Ethereum versus Bitcoin. As you can see, I guess this is the thing that I've tried to focus on many times. Ethereum versus Bitcoin is not really gaining anything. It's essentially stuck. It's almost like no one is trading anything else on the upside, but when Bitcoin moves down, it's, the dollar price moves for the other assets, and I'll show you. So here's Ethereum Bitcoin. Now here is Ethereum Bitcoin versus Bitcoin in US dollars. So as you can see right here, I ran a correlation on the Excel sheet. So this would be my data and not the CoinGenius, because I think they would get a lot more close calculation. But the correlation between ETH BTC and Bitcoin US dollar is 84% inverse. So essentially that's telling me that the great majority are simply trading Bitcoin and everything else is fairly stagnant. So here's the scary part. Here's ETH USD versus BTC USD, and right here, there's a 97% correlation over 5 minutes over the past 5 days. So whatever you're in, according to markets, there's essentially no difference. Every single product is Bitcoin. You don't need coin market cap. You're trading Bitcoin. That's what this says over the past 5 days. So Ethereum is Bitcoin, Dogecoin is Bitcoin, Chainlink is Bitcoin, all of it is, or that's what the market participants are saying. Now here, the Dow, you can see, is down 7.5% over the past week. Pretty fierce move down here. And the longer the world is closed for business, I don't think that helps the situation, obviously. Moving on, this I actually want to spend a second on. This is gasoline, also known as RBOB, and it's down 20% this week. Here, I want to spend a second on this. So RBOB's down, gasoline's down 20%. This is I don't know, it is what it is. I used to get in trouble for saying this on Reuters, but world gasoline demand dropped 21% in the past 24 hours. Does anyone really believe that? No, but futures set the price, so it is what it is. Now, the next is a brief tutorial on what you see and what actually is. This is called backwardation. It is when the front month is less than the next month. Now there's an interesting little hook here where cash, like basically the crude that's ready to go right now, is slightly higher than the futures curve. So that's called gamesmanship, or whatever you want to call it. But you can see the gasoline future, 55 cents in May, but trickling out 1 year, it's $1. So there's this anticipation that demand and price are going to increase by 100% on gasoline futures, If that holds, I don't know, but I just thought that it was worth noting. Moving on, this was feeder cattle. I loved it last week, and it's been limit down a couple days now. So apparently people thought they were going to eat at buffets, and now they realize that we're closed for another month, and demand has changed, apparently. Here's gold. It was down 4.6% this past week, where the Dow was down. I was down 7.5%. I think I might have skipped over that. All right. Yes, here's the Dow, and I'll increase this a bit. Lost pretty much all the gains in the past 24 hours. It was fairly flat, and now it's back to the low end of the range. It does not hold here. That's usually the point where stops get hit and it goes lower, or it's at an inflection point. I would not expect to see the Dow at 20,900 on Friday. And my closing thought, I guess, is an intro to what Christina alluded to, and it's some excerpts from Wikipedia, and I'll try to blow this up quite a bit. So the United States National Bureau of Economics determines contractions and blah, 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 blah. A depression is defined as a decline in real GDP exceeding 10%. Let's move on to the Great Depression. The Great Depression was this and that. Worldwide domestic GDP fell by an estimated 15%. So just using basic math, if the world is closed for business 8 weeks, 8 divided by 52 is 15.3. Will the world bounce back in 2 quarters? I will leave that up for discussion. And on that note, I will pass the microphone off.
Thank you, Steve. Can you please tell the team about those specific dates on the calendar, specifically the end of the month, beginning of the month, that we were talking about, where those consolidation patterns happen? Because it is April 1st, and we should definitely highlight that.
Okay, now I would say that this has changed drastically over time as, you know, the world has become more automated and less people are, I guess, picking up the proverbial phone to call their stockbroker. But generally speaking, a quarter end like today is what someone's getting paid a performance bonus on. It's what they're getting their track record marked on. And quarter ends, quarter begins, and year end, year begin are traditionally, over the past 20 years, extremely high volume times at the close of markets. So whatever time that asset that you're set, that asset you have and you're looking at settles, it's a very, very important trade where it might trade some wild price and then bounce back the next second. But there's tremendous amount of energy that goes into what I'll say printing a certain price at the end of a quarter. So the example, equities down. Many may not want to look like they were long equities, although it would be fairly obvious in the returns. So they get out of equities at the last second, hypothetically, and then you see tremendous volumes in the last 3 days. And the new allocations for whatever asset it is generally get started in the beginning of the quarter. It could be the first 3, first 5. Some trickle in over a month, but needless to say, the beginning and end of something are the most important, at least in my opinion.
Agreed. Thank you for sharing that, Steve. All right, so we're going to pivot quickly over to Mr. Samson Williams for an update on the stimulus package implications and the COVID-19 implications. And Samson has brought a very special guest. So Samson, I'll turn it over to you.
Brilliant, brilliant. I'm on my phone today because I'm on 2 other conferences on video on my laptop, multitasking at its finest. But in regards to the CARES, I forgot what the CARES Act stood for. In the CARES Act, which stands for, let me think for a moment, the Coronavirus Aid, Relief, and Economic Securities Act. So that's being ran through your SBA 7A disaster loan program. And so, spoiler alert for everybody who's listening, as of April 1st, this is no April Fool's joke. There isn't an application in process at this very moment. So you're going to have to figure this out on the spry, sort of like everyone else. There are some things you want to do in preparation for that. And so we'll discuss that The CARES Act not only covers benefits for small businesses, but also expands unemployment, particularly for all the independent gig and 1099 contractors out there, which is great. They do it under what's called the Families First COVID-19 Response Act, which basically gives you an extra $600 a week, in addition to the CARES Act, which will give you another $600. And I believe it expands unemployment an additional 13 weeks under the Pandemic Emergence Unemployment Compensation Act. So lots of different things for folks who are just regular workers who are part of the gig economy. That's super important under unemployment. But I think that for small business owners, the big program is the Paycheck Protection Program. The good news is it exists. The bad news is going to be administered by the banks and other financial institutions. So depending on your love affair with your bank, you may or may not like it. As we mentioned, there is no application as of April 1st at 2:23 Eastern Standard Time. Hopefully that changes. They're supposed to drop the application either today or tomorrow, but people will still need to get in line because there will be a deadline for applying. So for the state of Florida, if you're in the state of Florida, there's different economic development programs at your state and local levels. So in the state of Florida, the state of Florida's economic development programs, their application date deadline is May 8th. I know this because I have a couple businesses in Florida. We've already applied for state and local aid, which is completely different than the CARES Act. So just to sort of blend those two together, whether you're in California, New York, Ohio, or Florida, you have different state and local programs for coronavirus relief that you can take advantage of in addition to the CARES Act. So going back over to the CARES Act, they're going to follow the SBA 7A guidelines, but with a couple of little nuances. One, you should definitely get your company documentations in order, your certificates, your articles of incorporations, all your bylaws, your operating agreements, your certificates of good standing. They're going to probably ask you if you have any outstanding taxes, because the government doesn't necessarily want to give you back your tax money at an interest rate. They want to make you beg for it. And so you need to get your ducks in a row. But the good thing is, even though it's called the Paycheck Protection Program, many companies will be able to apply up to $10 million. There are a bunch of limitations because you needed to have been paying your payroll. They're charging you 4% per annum, which is a great rate. I've been telling all of my startup founders, definitely apply for this because there's not a VC out there who's going to give you your payroll at 4%. So, and it's forgivable if you keep your employees on. It's super important. But you can not only pay payroll, you can pay your employees' salaries, you can pay your company's mortgage, rent, utilities, your insurance programs, and other debt obligations. They haven't actually dropped the application, so they haven't defined what other debt obligations are, but you can assume they're going to be pretty expansive. So again, for your company, it's for small businesses, which is 500 or fewer employees, which is probably the majority of Americans listening to this podcast. So again, once that application process drops, we'll have some updates for that. But in the meantime, just get your ducks in a row, because I'm always of the opinion that it's first come, first serve. And so you just want to get your articles of incorporation and all your tax documents to show you've been paying payroll. So that's my update for the CARES Act. That's hopefully they send out an application shortly. And I do want to talk about the digital dollar, but before I do that, maybe Dr. Gray, who hopefully has mastered the unmute button, can give us some context or some background on the COVID response or pandemic.
I'm here. Yes, I've mastered the the art of the unmute button. So thank you all for having me this afternoon. I just, in following up to what Samson was talking about in regards to the CARE Act, I guess on the non-financial side of things, is we are just sort of, as we had yesterday with the press conference with Dr. Fauci and Dr. Burke explaining sort of where we are in regard to the pandemic and how things are looking. As you all know, that when we're looking in regards to cases, testing is slowly increasing. We are identifying more cases. We are sort of at the peak of that, the curve. And so it's important right now for everyone to continue to follow their state and local guidelines when it comes to social distancing, and staying at home, following all of the prevention measures in order for us to start to see and get on the other side of this curve and through the next and through the pandemic. So the next 2 weeks will be very important and crucial. In DC, we've just gotten the most latest update. I know we have up to, I believe they're now up to 600 cases. So we had 91 new confirmed cases as of this afternoon. And I believe we have, I can't recall the number of deaths, but we still on the lower end of the deaths, but we expect to see that to increase. As again was mentioned yesterday, the deaths will sort of lag. So over time, we're going to start seeing that number increase as well. But again, it's really important for us to think about long-term. And right now, a lot of places our orders are to the end of April, but it also looks like it may be going way beyond the end of April into May and into the summer. Again, we are learning a lot about this virus. We don't know if it's going to act such as with our typical flu season with influenza A and influenza B, in which we see that sort of decline in the summer with the warmer weather. Cue climate change. That is also, we just don't know how this virus will play out. We are learning on the go, learning as much as we can. Things are being updated daily. But it's going to be very important. It's going to have long-term implications, not only for our educational system, for schools, but even in regards to, for example, the CARE Act, the safety nets, including child nutrition, food stamp funding. Food banks right now are also, experiencing challenges. So we have a lot of systemic issues that are going to play out, and that will have long-term impacts. With, again, if this continues and if we don't get a hold or handle on this, it's going to have long-term impacts for businesses, small businesses, large businesses, and our economy, and that's going to have a long-lasting impact as well. So as a public health person here, again, just reminding everyone to just wash your hands, stay at home, only go out for essential needs, and just it's important to just continue to do our part.
Dr. Gray, I have a really quick question. I've heard that the shortage, and they're almost in wartime efforts right now, moving, aircraft carriers up as makeshift hospitals. But I've heard that there is a shortage and a lot of the medical staff is getting very sick and dying to the point that they're bringing nursing students up and retired employees just to try and help the shortage. Can you confirm that, or am I off base there?
No, that is correct. That is the one difficult thing about this is that, again, we already have prior to this pandemic, we had a strained healthcare system, in regards to our healthcare capacity. And right now, our nurses, our doctors, our physicians are on the front lines of this. They're working around the clock, which is also impacting their own health and their immune systems and their ability to be able to fight off the virus if contracted as well. So they're being exposed to it daily. We have a shortage in PPE, so protection equipment, low on ventilators. They're having to make very crucial decisions in regards to treatment for individuals. Again, we are experiencing, makeshift hospitals are being put up there. In New York, they have the makeshift hospital across from Montefiore Hospital in Central Park. We're bringing in the Navy ships. Again, just turning places and spaces into places where we can deliver care, and thinking about how to continue testing. And we have to remember there's still regular health care that has to be ongoing now. You still need doctors for emergency surgeries or people dealing with chronic disease. And so again, we are being stretched beyond belief. And so, it's really important right now to, as much as we can, help in any way that we can but yes, nursing students, medical students, retired doctors, retired physicians, anyone with any sort of healthcare experience or background are being pulled in. Here in DC Department of Health, we have a response team that's working around the clock. And again, even they are at risk. So they're the ones who are following up with cases, identifying the numbers daily. They are inside, many of them are inside the clinics, and those are clinics and healthcare centers and spaces. And that's also, again, putting many of them at risk. So we still have to walk that fine line of, it's important to keep them just as protected. So the social distancing goes beyond just keeping each other protected, but keeping our healthcare system running as best as we can. But yes, every day this virus has really taken a huge toll on our system, not even just the economy, but again on our healthcare system as well.
Agreed. Thank you so much for your comments. I'd really love to hear from Morgan Steckler on your feedback, Dr. Gray. Morgan, my question to you is this. With that level of confirmation of impact and Steve's previous statement of what the quantification of a depression versus a recession is, Morgan, what can you tell us about the statistical probability of where we're going?
I mean, that's a good question. I would say we are definitely heading into a recession. Definitely with some of these stimulus packages, we're seeing some short-term escape that people can use as a leeway for them to make their rent, for those people who are not getting any leeway on that. There's some interesting laws that have also been passed with the recent stimulus package. One of them that I definitely thought was very interesting that was signed into law last Friday is that you can pull out as much as $100,000 from your retirement accounts without paying an early withdrawal. So one thing that I think that's going to help people is you can have this without having to take any penalties or have to pay the short-term capital gains. Of course, that's going to play a part and be subjected to people who are directly affected by COVID. So it's whether it's a family member or a small business, something like that, you will be able to take that. And also for people who are not directly affected, they've made it, they being the government has also made it, raising their limits up to $100,000 from $50,000 that you could take out. And these payments are going to be extended through the rest of 2020 for a full year. So I think these are last resorts by the government to help people try and get through this. The question is, you'll have to pay that back within a few years. The government is probably not thinking about what's going to take place in those few years. They're trying to think about the now as opposed to later, but that seems to be their motivation these days. I did want to just change topics quickly and also make note of, at least on the precious metal side, there is a major supply issue that has been going on. All refineries and mints around the world are closed. So there's now major gold shortages. The only mint that's open is the United States Mint. So a lot of precious metals dealers and even digital like Paxos Gold and Tether Gold, of which there's been major surges over the last couple of weeks, obviously to get out this dollar. They're reporting, I mean, those digitals are okay, but physical memberships and ownerships, they're reporting 8 to 12 week delays now. So people are trying to get out of this dollar, but I think you're getting a little late to the game if you're trying to get metals. It's going to be interesting to see. The ratio of gold to silver is still 112 to 1 or so. So I would definitely say that you have a big play to get the silver, especially if you want to get cost of goods down the road. I can go on and on, but I did want to at least bring up those 2 points. And I just want to continue to listen to what Dr. Gray and everyone else is talking about. There's some great people here.
Awesome, thank you, Morgan. Steve, I believe that you had a question for Dr. Gray.
Yes, hi, this is Stephen Quan. I guess for Samson or Tiffany, Dr. Gray, when I see these statistics, I just was wondering if what was the point of inception where they started keeping them? Like January of this year? Was it last year? I'm just not clear when I see that 100 people have died of coronavirus in Illinois. I was just curious as to when your belief is that they started, I guess, recording, that as a cause of death for this state, or I guess any other.
Hey,
So this is, oh, go ahead.
no, you first, Dr. Gray.
Oh, so it really, depends. So we sort of started to know about the first cases in Wuhan in, I believe it was November or December. So the beginning, again, it was those initial sort of cases, and when we sort of first became aware of the virus, again, that sort of initial is the numbers were sort of kind of, it's that potential of there actually may have been more cases versus the numbers that we sort of first know. In regards to when the cases started to sort of make its way over, across into the States and into the US, that was sort of around, I guess, I would say probably, maybe off, but I would say around maybe January or so. And again, as the cases were starting to be, it's all about when the cases were starting to be identified in each of these various places. And so when the cases started to present themselves, then each health department, either local health departments, state health departments, were starting to keep this information, as well as on the larger global scale, World Health Organization and CDC and entities such as that, as those organizations they were starting to track kind of the number of cases that were being reported. So again, it's an ongoing effort, and again, it's a round-the-clock effort of identifying individuals calling in, following up, contact tracing. So again, that's why you start to see, again, as we begin to identify those cases either through contact or through health systems reporting the information, that's sort of how things are. So around December, January, you can think back to even the cases in Seattle, for example. That's how we started to, around the time we started tracking all of the various cases, specifically in the US. But globally, this has been going on since, again, we kind of identified or learned of the issue and identified the virus back in November or December.
Yeah, Steve, this is Samson. January 15th is in the state of Washington reported to the CDC, our first case here in America. And that's why Seattle was pretty much on lockdown early. So you'll see these continue, you'll see the outbreaks run in waves. And the thing I forgot to mention, and I know this is why Oz skipped today, so I couldn't badmouth him, for the CARES Act and even for your $1,200 funds, you're going to be looking at May before anyone gets any of those funds, assuming you have direct deposit with the IRS. If you don't have direct deposit with the IRS, you need to go apply because you're unbanked or underbanked. You're looking at probably Q1 2021 before you get your $1,200. And the same thing goes for the CARES Act for the Paycheck Protection Program. Because the application isn't out right at the moment, you do want to apply as soon as possible because it's first come, first serve, and it's going to take a minute for them to figure out how to actually, distribute these funds. The other thing I wanted to bring up is I'm super excited because on Genius Wednesdays, we talk about cryptocurrencies and all that good stuff. And I'm super excited what happens 30 days from now when we come out of this social distance quarantining, et cetera, because people are going to have fundamentally look at the dollar and be like, do I have faith in that currency? Because we've had all of this conversation about the digital dollar. And so I've been telling people and having this conversation about, oh, the US is going to go to a digital dollar. I think that's so funny, short-sighted, and hilarious. And it's such a great opportunity for, number one, Doge coin, and number two, Bitcoin and all the other cryptocurrencies, because people don't remember the history of the colonial notes, the continental currency, the Massachusetts Bay Colony, when in 1690 they wanted to go to war in Canada, so they created their own money. This thing called the Continental Congress that in 1775 came together to create their own currency. They forget that the US dollar as we know it today, it was made in 1914. It was birthed in 1914 when the Federal Reserve came into existence. And later in 1945, with the Marshall Act at the end of the World War II, the US dollar replaced the pound sterling as a global reserve of the currency. So when we say we're going to make a digital dollar, you're saying you're going to put the full faith and credit of Uncle Sam, someone who just created. Right now, the national debt clock is at around 23 trillion. When you add on the next 6 trillion worth of debt, worth of cash we're printing, that brings us around to 29 trillion. You're saying that the full faith and credit of Uncle Sam with $30 trillion in debt is going to create a digital dollar. I think that it's going to be a moment where some states, particularly New York, California, probably Texas, are going to say, if Uncle Sam creates a digital dollar for the US government, the state of New York is going to create a New York dollar. It's unprecedented, but it's rather creating a digital dollar for the state of New York has never happened, but New York used to have its own currency. And I think that 30 days from now, we're going to have a real conversation of whose currency should dominate. The US dollar or the state currencies, because the faith in the dollar is going to wane. And when that happens, it's going to be a very interesting moment for Dogecoin *1. And then as well as all the other cryptocurrencies as folks determine, when money becomes a game of faith, who do they believe in more?
Samson, I completely agree, and I'm so glad that you brought that up. That is basically what we've been trying to tell people for the last 2 years is this recession is coming, and at the end of it, the world is going to look very different. And this fabric that we've created of digital transactions already paves the way for us to be able to transition through this. Can I ask you, Samson, or maybe Steve, or really anyone from the Genius Network here, can we touch on kind of the 1934 Gold Act and the gold standard? And, if we lose faith in the dollar, even if we move to a digital dollar, do we have to go back to a gold standard? At what point is it tangible and no longer, these future markets and like this over-engineered mechanism? That's probably a lot to unpack, but that's my question.
I can add something. I guess I've collected coins for years before I was on Wall Street, and I guess I just learned what the exchange rates were. It was 27 grams of 90% silver was a British crown, a US dollar, 1 peso, 1 yen, 5 pesetas, 5 francs. I could go on and on, but there were essentially exchange rates that were just embedded where it might have said 1 peso. I guess, I don't know if people know this, but in 1908, I believe was the last year, or 1904 was the last year that Mexico, the US, and Japan all simultaneously produced a 27-gram, 90% silver coin. And it was 1 yen equals 1 peso equals $1. So obviously there were other circumstances in the past 116 years, but when people say that the dollar has lost its value, that there's an exchange. I mean, sometimes we forget that Bitcoin for dollars is an exchange, or so gasoline for dollars is an exchange, and the dollar is the median point where I give the gas station $2, I can take 1 gallon of gas. But if I try to bring that gallon of gas to Chase Tower in Chicago and deposit in my account, they're going to get Fox News and CNN saying, wow, this virus, there's some new virus because this guy has clearly lost it. But it's just, I think it's just the median, like the prices increase versus the dollar. So the dollar might actually be stagnant. It's just everything else has gone up. Or I guess looking at the glass half empty, all other prices have stayed flat and the dollar has just decreased. But I guess it's just the perception, with the number 1, teaching my son craps. 1 and 1, snake eyes, but you can't tell the difference. Where 2 and 4, that's a soft 6 versus 3 and 3, but you can't tell the difference on the dice. And I think that a gold standard is highly constraining because you need to, 1, go purchase that, and then 2, you have to increase the price, the amount of debt one wants to issue, and it's the same exact problem in Bitcoin, where I'll say it again, 99.9% of crypto is tethered to Bitcoin. So it's on a fixed supply system, but Bitcoin is tethered, no pun intended, to stable currencies. Those are essentially an infinite supply because someone can come up with a new one and a new one and a new one. So you have the growth of Bitcoin at infinite possibility, and you have everything else finite because of the way the system is. So it's, I'll say this, and you wanted those statements. Bitcoin in the crypto market is the exact same system as we're in now in the real world. And I can explain it in depth at another time, but Bitcoin is the dollar, the tethers are the Fed, and everything else is that debt trying to increase where it can't unless the price goes up. There.
I think that's a great way to put a synopsis on it, Steve. All the mechanics are pretty reminiscent of the current the current system. And I think that's a big part of why we haven't seen this big dramatic shift, and maybe why COVID is pushing us towards that, is, the big financial institutions wanted to know how to control it, and you can't control peer-to-peer transactions. You just can't. So they're still trying to, work within certain parameters, but it will be changing. Speaking of changing, I'd like to pivot really quick. The behavior of Bitcoin mining has drastically changed over the last week or two. And with that, I'd love to hear from Dustin Minch, our resident mining expert, about what those implications have.
Yeah, so for those that don't know me, my name's Dustin Minch. I'm head of mining intelligence for CoinGenius. And so with the Bitcoin mining, a lot of people ask me, well, what happens when the price of Bitcoin goes down, or when the halving happens? Like, what happens to mining? And it's already starting to kind of happen. And for once, Cointelegraph, they've actually wrote a legit, but what I consider a pretty legit article for once. Not to make fun of them at all, but the network hash rate has dropped almost 15%, which is they say which is a 45% sink from its peak highs of 2020. And a lot of people speculate why it's happening. Some people blame it on coronavirus, but it just really has to do with the price of Bitcoin. The price of Bitcoin's down. The network hash rate, if it continues to keep going up, those profits, as more mining power joins the network, the same amount of Bitcoin's being manufactured every single day. Every 10 minutes, 12.5 Bitcoin's being created. But as more nodes join the network, that's being dispersed amongst those nodes. So if you have 10 people mining Bitcoin, then that Bitcoin gets split between 10 people. But if you have 100 people join the network, then that gets split evenly between 100 people, as long as they have the same amount of hash rate. And what's interesting now is that the miners that are able to stay plugged in, they've managed to get a really cheap electric rate. I imagine people that are operating at anywhere from like a 1 cent to a 3 cent kilowatt hour rate, those are the miners that are going to still be mining right now. And they're the ones that are going to benefit the most from this, because now the Bitcoin's being split, between less miners, so they're earning more rewards. So if you're a stay-at-home miner, or a mining operation that's on a higher electric rate, you got two choices. Get out of the market and sell all your equipment, which, if you can hang on to it, I wouldn't advise you doing that. Or, just kind of unplug and just kind of wait for this thing to unfold. So I think that, I'm just going to leave it with that. So, there's a lot of miners that are just kind of sitting on the sidelines, just waiting for the market to return. And a lot of us believe that it will. So that's really it for the mining.
Awesome. Thank you,
I just wanted.
Oh, go ahead, Jeremy.
Yeah.
Put my video on here. So just wanted to chime in here as well. So, Dustin, want to get your thoughts. So the mining difficulty adjustment, right, came into play. And it was one of the most significant, if not one of the most significant difficulty adjustment ever. And basically what that does for the layman is, for people that have older hardware, it kind of makes it unprofitable to an extreme level for those people specifically. And people with a newer hardware, even if they have higher electricity costs, they're still able to capitalize and still have a pretty good break-even point. So I think that this is a tremendous point in time as it relates to mining, and why you saw a lot of miners capitulate, because they had no other choice but to offset some of the costs of their electricity because it wasn't as profitable. Now, the difficulty adjustments is a very important thing to keep an eye on, especially as we go into the halving. And there's a lot of OG miners, as you would call it, that feel very strongly with the mining, the halving that's coming up. The difficulty adjustment's going to be even greater. And after the halving, it's basically going to take every single person that's on the network with older hardware off, because it's going to be so unprofitable, just similar to what we saw in 2018, where people just started, basically getting rid of their mining hardware or selling it pennies on the dollar. So they anticipate the same thing is going to happen. Tremendous amount of people are going to capitulate. So over the next 12 to 18 months, we're going to have quite a wild ride as it relates to the Bitcoin price, even though most people do, have this hope that the Bitcoin price is just going to rocket right at the halving, which I just don't think is reasonable. What are your thoughts there?
I don't think it is either. I think it's going to be like kind of gradual. I don't think that we're going to see any parabolic moves this year. I think that, yes, we will slowly creep up, and then maybe we'll see some parabolic moves next year. That's just my gut instinct. There's just too much going on this year. But, a lot of people think, is Bitcoin mining dead? And just to kind of put it in perspective for you, I was literally on the sidelines waiting to order one of the new S19 ASIC Bitcoin from Bitmain, one of the new ASIC miners. And I got caught up in the day-to-day life. They announced the launch, and within 20 minutes, those miners, I think it was within an hour, they were sold out in a day. So there's definitely some big players at play that are just gobbling up all the hardware. I don't know where, I don't know who. I myself was kind of upset that I didn't get the chance to buy one of those miners. So there's definitely people accumulating the more advanced hardware. So, and I've talked to some of the other OGs, and they said that 4 years ago, this is a very, very similar scenario of what they faced 4 years ago. So there's, if you look back then, it was unprofitable then for quite some time, but, then we had the bull run, and there was quite a bit of profit to be made. And I think that just, myself and a bunch of other people included, were just kind of waiting for that to happen. And, nobody has a specific date marked on the calendar as to when that's going to happen. So we're just waiting, so that's it. Yeah.
Well, thank you, Dustin. So Mr. Jeremy Bourne, if you have a quick moment to jump back on video, now would be a really great time to talk about the CoinGenius virtual conference that's coming up on Friday, 4/10, which is not this Friday, but next Friday, where we're going to be unpacking a lot of these topics, including mining, including the evolution of money, including digital identity and wallets, and really a lot of educational information. Jeremy, would you like to say a quick note about that, and then we'll need to wrap up for today?
Yeah, sure. So we're really excited about this virtual conference. Obviously, everybody's stuck at home because of COVID-19. And, it's really important that the cryptocurrency community stays together, and we, promote this level of continuity and community to connect each other and to make sure that we're sharing ideas and thoughts about the industry. So putting together this first conference is our first foray into the conference circuit. As you can tell, we have a lot of really incredible minds that are on this call every single week talking about the market. So we wanted to bring that to the general public. I think we have over 40 speakers at this point that are fully committed, people from, CME Group to Kraken to Binance to people that are really running the industry, people that are regulators, people that, like Dr. Gray, talking from the medical field as well. So there's a lot of really incredible minds that are going to be speaking about, as Christina had mentioned, the conference series is called Collective Intelligence. So this will be a series of one-day conferences where we have specific topics that are relevant to what's happening today. So this one is fear, greed, and the evolution of money. Fear in terms of everything that's happening with COVID-19 and the pandemic. Greed, we like to say Wall Street's foray into the crypto markets. As we know in traditional capital markets, the 1% has all the knowledge and they make the big moves, and that's seemingly happening in the crypto space as well. So how can the average person get ahead of that with better data? And that's the whole point of CoinGenius. And then the evolution of money. I think we're seeing money and the monetary system, fiat currencies evolve in real time. And I think, through COVID-19 and the recession, this is just acting as an accelerant, and people's hands are going to be forced to adopt new technologies that they wouldn't otherwise have been ready to adopt until this point. So we're really excited. Maybe we can include the link to the conference and you can sign up. The first one that we're doing is completely free. We want to share this information with the general public. So please sign up, please join the conversation. And we're really excited to have everybody.
Great. Thank you so much, Jeremy. I do have a quick side note just to plug our partners, Bad Crypto. They have a coin called Bad Coin that you can mine with old laptops. So as that equipment becomes less applicable for Bitcoin, there are other mining projects out there that you can leverage and keep things moving forward. So,
hey, Christina.
Yes, sir.
One prediction, because when we talk about the evolution of money, I'm going to predict this now after I talk to Dr. Gray. She has a doctorate in public health. And so this time next year, epidemiology surveillance data will be as valuable as the US dollar, hands down.
I would concur. I'm a big believer that data is the new oil and data is what's going to make a difference. Awesome. Well, thank you so much for joining us here for Genius Wednesdays. Really quick, does anyone have any quick comments before we wrap up today?
Just a quick comment, Christina. There is a small business guide to the CARES Act. I'll send that link to you so that you can post it for people to have access to it. Something that's a good read, help you get set up for all the things that Samson was talking about. My understanding is also that the SBA intends to release the application on Friday. That's not written in stone. And then the third thing that I guess I would recommend to small businesses is if they need to get their paperwork together, contact your accountant or maybe your attorney if they have anything to do with your articles of incorporation or the other things you might need. And I'm sure they'll be willing to give them to you if they have copies. So just those three things.
This is Samson again. Steve Quan, if you go to coronavirusapi.com, they have scraped, there's 3,152 counties in the US, and they've scraped all the county data for coronavirus surveillance. And so you can download a CSV, manipulate that data, see how it is, because they've skipped the federal government, gone straight to the state and local governments. It's called coronavirusapi.com. Super interesting and helpful to see from a boots on the ground perspective across America what the states and counties are tracking versus what the federal government is reporting out.
Samson, I love it. That just reminded me that our partners over at Ethereal Labs are doing something similar. I will pass that information over to them. They're also creating democratized data sets in order for people to understand this and fight COVID. Really quick, Chris Pulley, I see you there. Did you have a quick comment for the team?
No, I was just going to say goodbye, and it was a great call today and valuable information. So outside of that, we look forward to participating in your the April 10th event, and it's going to be very exciting. And we'll be announcing another virtual conference coming out later in the month as well. So it's going to be an exciting month.
We are very excited and cross-promoting. Hopefully CoinGenius will be able to join Bad Crypto for the virtual blockchain week, the first ever. So congratulations biting off that monster. We just did like a one day, man. I don't know why you had to do the whole week, but we'll be there to help support it and help promote it and help get more users to understand all of the things that are happening here in the space. So with that, thanks everyone for joining us here for Genius Wednesdays. We will see you again next week.